Hello, everyone. I'm Janine Gilliott, Director of Capital Markets Policy and Outreach at SASB. Welcome to today's webinar, which is Bringing the PRI Principles to Life, SASB as a Tool Set. Almost 700 people are registered for this webinar, so while we're waiting for people to dial in, I'll talk about our goals for today. This is one of a series of webinars that SASB is hosting to demonstrate practical application of the SASB standards by investors. And we're really pleased to be co-hosting today's webinar with PRI, the Principles for Responsible Investment, because we're often asked how the PRI principles and the SASB standards interrelate. And what we hope to demonstrate today is that the SASB standards are a powerful tool to help PRI signatories integrate ESG into investment decision-making in a rigorous and a systematic way. So the agenda for today's webinar is that we're going to do some introductions first before we get into the content. And on the line, as I mentioned, I'm Janine Gilliott from SASB. We have Mandy Kirby, who's the Director of Reporting, Assessment, and Accountability at PRI. We have Deborah Eng, who's the Director in Strategy and the Head of Responsible Investing for Ontario Teachers' Pension Plan. And we have Katarina Hammer, who's co-head and a senior ESG analyst at Nordea Asset Management. So what we'll do today is Mandy will provide a high-level overview of the PRI principles and PRI's new blueprint. I'll provide a high-level overview of SASB, and then we really want to use the bulk of the time today for Deborah and Katerina to talk about how their organizations integrate ESG into investment decision-making and how they've used the SASB standards to do that. And we do hope to have 5 to 10 minutes at the end of the webinar for Q&A. So please submit your questions throughout the webinar, and we will try to pick a couple where we see common themes of questions. So with that, we want to have an understanding, a little bit of an understanding of who's on the line today. So we have a poll about what is your professional role? Do you work for an investor, and that's either an asset owner or an asset manager? And are you in an ESG or a corporate governance specialist role? Do you work at an investor as an analyst or as a credit or equity researcher or portfolio manager? Are you in a corporate reporting role? Do you work for a nonprofit or an NGO, or do you have another role? We'd just love to have a sense of the type of people who are on the line. So if you can please answer this poll, and we'll give it a minute to get the results. Poll's now open. Great. And it looks like over half of the people on the line work for investors, and that's roughly split half and half between ESG and Corp Gov specialists or analysts and portfolio managers. And the other half of the people on the line work in corporate reporting or other roles. So thanks for that. It's really interesting to know what the audience looks like. So with that, I'd like to turn it over to Mandy Kirby from PRI, who is going to give us an overview of both the PRI principles and work that PRI has been doing on its long-term blueprint. So Mandy?
Thanks, Janine, and thanks everyone for joining us today. I'm Mandy Kirby, Director of Reporting and Assessment and Accountability at the PRI. And I'm going to talk about the PRI, who we are, who is involved, and what we do. And in particular, I'm going to talk to you about our new 10-year blueprint for action that we've held launch events for in London last week and New York this week. And a core plank of the blueprint is a focus on accountability. Next slide, please. So for those of you that are not familiar with our organisation, the PRI is the world's leading proponent of responsible investment. Now, 6 principles are a voluntary set of investment principles, and they offer a menu of possible actions for incorporating ESG issues into investment practice. The principles were developed by investors under the leadership of the UN, and they've attracted a global signatory base representing a majority of the world's professionally managed investments. Of particular relevance to today's discussion, the principles call for appropriate disclosure by the entities in which we invest, as well as a commitment to transparency on our own activities. And next slide, please. The PRI supports its international network of signatories in implementing the principles, and as you can see, we have over 1,700 signatories, and that's across 50 countries globally. And as long-term investors acting in the best interests of their beneficiaries and clients, our signatories need to understand the contribution that ESG factors make to investment performance, the role that investment plays in the broader financial system, and the impact that those investments have. Next slide, please. In fact, our mission states that we believe that an economically efficient, sustainable global financial system is a necessity for long-term value creation. And such a system will reward long-term responsible investment and benefit the environment and society as a whole. And our blueprint states that our aim over the next 10 years is to bring responsible investors together to create a sustainable financial system that contributes to a more prosperous world for all. Next slide, please. So how are we going to do that? This is what we decided is our blueprint vision. We consulted extensively to create an ambitious and achievable vision for how the PRI and the wider responsible investment community should progress over the next 10 years. And we'll continue to consult with signatories on our 3-year strategies and our annual work programs that underpin the vision. And you can see there are 3 areas of activity, and underpinning those, 9 areas of focus. In the center, responsible investors, with empowered asset owners at the top of the investment chain. And this is our core work, and our focus on this area has not changed. Next, sustainable markets that will help create an economically efficient, sustainable global financial system. And we'll work on the parts of the system where we can make a difference. Beneficiaries, investors, their advisors and service providers, the companies and issuers, the securities exchanges, the regulators, and we'll monitor the trends that will continue to reshape the financial system as we work. And a more prosperous world for all, recognizing the role that investors can play in having positive real-world impact through their actions. And this includes a commitment to helping signatories meet their commitments towards the UN's Sustainable Development Goals. Now, the PRI welcomes the responsible investment new starters, as well as those that have been leading the field for years, and everyone in between. And in doing so, it's important to celebrate the successes of the best that others can learn from, to highlight the progress that's being made across the spectrum, and to guard against complacency at the top or the bottom. And so a strong theme in the core is the idea of increasing signatory accountability through minimum standards and recognizing leadership. Next slide, please. And for signatory status to be meaningful, we must ensure that signatories are living up to the commitments they make when they're signing up to the principles. And strong accountability processes will identify opportunities for the PRI to engage with struggling signatories and support progress, and enable us to respond when signatories are not acting in good faith. And so we've built upon the PRI's December 2015 consultation paper, which returns strong signatory support for using the reporting and assessment process to help differentiate signatories and to provide additional transparency and give a clearer picture of responsible investment trends. And this means over the coming months and years, we will launch a responsible investment leadership table. And the leadership label seeks to identify signatories' best practices whilst accounting for their size, their type and region. Introducing leadership status will recognise those who are already implementing leading practices while providing guidance to aspiring signatories through an annual leadership report. And we'll communicate this methodology early next year using the reported information as a basis, but we'll have an eye on identifying signatories that are leading in responsible investment activity and going beyond the standard practice. And this is going to be separate from criteria that will be developed for an awards programme. And the awards will allow signatories to nominate people or projects that are making outstanding contributions. At the other end of the spectrum, we will define a minimum standard of activity that signatories must achieve based on a set of universally applicable criteria. And we'll talk privately with signatories that are not meeting those standards to allow us to monitor and engage with them, the aim being to move everyone forward. And those that are not meeting the commitments will provide a mechanism for us to delist them after a 2-year period. As part of our commitment to transparency and accountability, we'll also continue to enhance access to our data portal, which is a new platform that allows signatories to share their reporting and assessment data with groups such as asset owners on an opt-in basis, and to query our public data set of responsible investment information. And this will empower asset owners to ask more questions of their managers. We'll also continue to build close and cooperative relationships with other peer organisations and disclosure and standard setting bodies that have the common goals to improve data collection and disclosure. After all, reliable, timely information is needed for beneficiaries to understand and control their investments, and for asset owners to monitor their managers, and for investment managers to accurately price assets and assess risk. And we understand that this information, this including material ESG information, is going to be fundamental to responsible investment, but opinions do vary on what ESG data should be disclosed and how, which makes the analysis currently difficult. So we will advocate for meaningful, forward-looking and globally comparable company investor disclosure. We'll promote including material ESG information alongside other financial data. We'll encourage consolidation of reporting standards and regimes, and we'll develop our own reporting framework to measure the contribution that responsible investment makes to tangible ESG improvements in the real world. And that really, there is also talking about SDG activity. And we know there's a need for more alignment on what information is supplied and how. And as such, we have convened a body of 9 investor organisations to consider this topic of investor expectations from corporate ESG reporting. And that group consists of Ceres, the CFA, Focusing Capital on the Long Term, the Global Impact Investing Network, the Global Sustainable Investment Alliance, ICGN, UNFFI, the World Federation of Exchanges, and PRI. And the group was established in response partly to the Corporate Reporting Dialogue, which is a group of 8 standard providers for corporate reporting, which includes SASB. And they were asking that we try and create a more unified investor view as part of efforts to develop the principles around corporate reporting. And this group is aiming to build on existing initiatives and frameworks and provide some guidance at a structural level. Research that we've undertaken in previous years on our signatory practices, we convened a working group looking at assurance, and that began work in January this year. And it's in the process of analysing data on assurance, verification and confidence building measures by over 1,200 investors that reported to us this year. And the practices and use of standards is going to be used for us to develop guidelines for helping to improve confidence in the reporting and data. And we'll release that research later on in the year. And the working group really has already made great strides, and I'm looking forward to seeing the outputs from that. And finally, based on very strong support from our signatory consultation, we'll also be developing a process to delist signatories that contravene the spirit of the principles. Next slide, please. So in timeline terms, and obviously in content, there's a lot of work there, and a lot of it is being done right now. The PRI board is considering our proposals on minimum standards and the methodology to help identify the leadership. And as is very much the PRI way, there'll be an opportunity to participate in a consultation that's going to be open from about mid-July through to the end of September. All of our materials, including the assurance guidance, methodologies and updates, will be available on our website. And you can also find the Blueprint microsite and a really lovely video on our 10-year vision there. And I should mention that we will be updating signatories via our annual Signatory General Meeting, which is held during our PRI in-person conference. And we'll also be exploring the concepts of minimum standards and leadership in our workshop during PRI in-person. And this year, that's in Berlin from the 25th to the 27th of September. In action terms, that will mean us implementing a lot of our plans in 2018, and that leaves us a lot to do. So I think there's quite a lot of content there. Thanks a lot for your attention. I'm very happy to hear questions after the other speakers. Back to you, Janine.
Great, Mandy. And it's great to hear how much progress you've made on thinking through the signatory accountability. That's really, really interesting work. What I want to do is build on some of Mandy's discussion about the principles themselves. And As she mentioned, PRI's first principle states we will incorporate ESG issues into investment analysis and decision making. And to do that, to integrate ESG into investment decision making requires data and information. And at SASB, we're focused on ensuring that investors have access to the data that's needed to integrate ESG into investment decision making in a rigorous and systematic way. Next slide. SASB's mission is to develop standards for disclosure of sustainability information by companies to investors. We're focused on identifying sustainability disclosure topics and metrics that are decision useful to investors. And we're developing the SASB standards using a process that is roughly modeled after the process used to develop U.S. accounting standards or accounting standards in any jurisdiction. And that's a process that's transparent and inclusive. Lots of ESG disclosure frameworks exist, and Mandy alluded to that. So what is different about SASB? At SASB, we're focused on identifying ESG disclosure topics and related metrics that are material. And by material, we mean likely to impact financial performance, so that those issues are decision useful to investors, they're cost effective for companies to provide, and they're industry specific. SASB standards are industry specific. We set them for 79 industries. And that's because we believe the topics that are the ESG topics that are most likely to impact financial performance vary by industry. So what's relevant for agriculture is different from what's relevant for financial services, is different from what's relevant for media and telecom. And as I mentioned, SASB standards are developed using a process that's evidence-based and informed by market participants. And those market participants are both issuers, companies, and investors. So SASB standards are developed for use in financial filings. In the U.S., that's the Form 10-K or the 20-F that's filed with the SEC. And the reason we're so focused on including material ESG information in financial filings is so that investors will have access to comparable, consistent, and reliable information on ESG factors, similar to the quality of the information that investors have come to expect on financial performance today. We often get asked how what SASB is doing relates to sustainability reporting. And I want to be really clear that we're not trying to replace sustainability reports. But sustainability reports target multiple audiences. They target customers, employees, investors with a very broad set of information. And what we're focused on is what's the subset of ESG information that's likely to impact financial performance and therefore is of interest to all investors and we believe should be included in mandatory financial filings. We often get asked, what do we mean by sustainability? And SASB's standard setting process starts with 30 general sustainability issues that might impact or could potentially impact financial performance. Those are the issues you see on this slide, and they're grouped into 5 broad categories: the environment, social capital, human capital, business model and innovation, and leadership and governance. SASB's research process for each industry, and we go through this research process for each of our 79 industries, starts with the 30 broad issue categories that I showed you on the previous slide. And it identifies which of those issues are most likely to impact financial performance in a specific industry. SASB's research team looks for evidence of how a topic could impact revenue, cost, valuation of assets and liabilities, and cost of capital. This is really similar to the analysis that a credit or an equity research analyst would do. We also obtain input from both issuers and investors as to what topics, ESG topics, they think are most likely to impact financial performance. And we use that process, both our internal research process combined with obtaining input from issuers and investors to develop provisional standards for 79 industries. So what is a standard? And what we've got on this slide shows you a sample of one of our standards for an industry. And remember, there are 79 of these. And each standard includes industry-specific disclosure topics, in this case, greenhouse gas emission, air quality, water management. It includes accounting metrics to measure performance on that disclosure topic. And it includes guidance for companies, suggested guidance to compile data, and suggested activity metrics for normalization. And so we're really focused on putting as much detail in our standards as possible to help ensure that companies report comparable and consistent data to investors. We're currently in the later stages of our standards development process. As I mentioned, we've issued provisional standards for 79 industries. We just finished another round of stakeholder consultation, which was fairly extensive. We obtained feedback from 38 institutional investors on the standards and over 200 companies on the standards. We're evaluating all of the proposed changes that we heard through that consultation process. And later this year, we'll be issuing any proposed changes to the standards for public comment. So we really encourage all of you who are on the line to be on the lookout for that and comment on the standards that you're interested in. Once the standards have been issued for public comment, we'll consider the public comment feedback. Our standards board will consider that, and then we'll issue codified standards early next year, and the standards will be ready for use. After that, we envision that we would update the full body of standards every 3 years to make sure that they reflect emerging issues and new issues. We have strong support from institutional investors for SASB's work. That includes support from institutional investors for improved ESG disclosure and for SASB's approach, which focuses on material issues that are likely to impact financial performance. So I really want to thank the Investor Advisory Group for their leadership on this topic. And we have 2 members of our Investor Advisory Group on the phone today. That's both Ontario Teachers and Nordea. So with that, I want to hand it over to Deborah to start talking about how Ontario Teachers thinks about ESG and applies some of these ideas in practice. Deborah?
Hi, thank you very much, Janine, and thank you for having me on this webinar. What I plan to do today is probably just give you a little bit of a high-level overview of Ontario Teachers and really drive home why sustainability in our investments is so important to us. And really want to talk about how we establish a culture and a foundation across the entire organization for considering ESG risks in our investments. And I believe that we'll do a deeper dive with Katerina into sort of an actual case study on a investment. But my purpose is really to lay the foundation of how we've done it. Next slide, please. You can skip this one too. This is required by our legal team. So about Ontario Teachers. So first of all, we're Canada's largest single profession pension plan. We only manage the pensions for the teachers in Ontario, and there's about 318,000 members. We manage about $176 billion Canadian in assets that are pretty much invested globally across a variety of asset classes, including public and private equity, infrastructure, real estate, fixed income, and credit. What's also important to note is that we manage about 80% of these assets in-house. A little bit about Teachers is that we're also a mature pension plan, and what this means, last year we paid out about $5.7 billion in benefits and only received about $3.4 billion in contributions. So every year when we start out at the beginning of the year, You know, we already start with a $2.5 billion deficit that we need to make up for with investment returns. As well, we continue to mature, which basically means that we have fewer and fewer teachers contributing to the pension plan for every one retired teacher. And what this means is if we have an investment loss, it's really hard for us to get back on track. So of course, this means that we need to manage risk very carefully. And environmental, social, and governance factors are one area of risk that we take into consideration because we think they really have a material impact on our ability to meet our pension plan promise to our teachers. Now, we take a slightly different approach to managing ESG risk than maybe some of our peers. You know, I head the responsible investing team, but my team is not responsible for managing ESG risks across the plan. Instead, what we've been doing is really ensuring that the accountability for managing and integrating ESG risks lie with every single portfolio manager across teachers, and there's about 386 of them. Now, this has been a somewhat longer approach. It requires a culture change within the organization. It requires a lot of collaboration and buy-in, and really acknowledgement across the plan of the importance and materiality of ESG risks, and as well a consistent and systematic approach to managing them. Next slide, please. So to help us, a number of years ago, we developed our responsible investing principles. It really helped to define what we meant as an organization when we said that we had responsible investing practices. You know, we wanted to ensure that whoever you asked at teachers would know exactly what you were talking about and could articulate their process. You'll notice, of course, that they look an awful lot like the PRI principles, but it really makes sense for us. You know, obviously, we integrate ESG factors in our investment process. As Janine said, you know, we need transparency and disclosure on metrics in order to be able to integrate ESG into the process. And for that, sometimes we actually need to engage with our portfolio companies in order to get the information that we need. Now, as a large pension plan, we manage over 3,000 different companies at any one time, so we can't do it alone. So we collaborate, of course, with like-minded peers, as well as industry organizations, of course, like SASB and the PRI. And our last principle is really acknowledges the fact that ESG risks are constantly evolving and changing. If you can think maybe back 5–10 years ago, cybersecurity was not a big issue, but today it's one of the top issues facing our companies. As well, our practices and our integration of ESG has also evolved over time, and you can think about the challenges with trying to assess our climate change exposure. So the last principle really, you know, acknowledges the fact that we need to constantly, continually improve our practices. Next page, please. So as I said, we are the responsible investing team, and we have portfolio managers that sort of manage on the ground with each individual portfolio companies. And we really try to take a step back and have a total fund look. You know, how does our portfolio look like? What are our exposures to ESG risks? So one of the things that we were able to do actually with the SASB materiality map is to take our public and private portfolio and map it and remap it out based on material ESG risks. Now, because SASB is sector-based, we were able to use this on our private assets, which is important because roughly half of our equity portfolio is actually in private assets, and that's about $30 billion. And we have another $20 billion in infrastructure. So the exposures that we have and have little transparency on is really in our private sector, private assets, and the SASB view and screen actually really helps focus our attention. So what this table shows you is really the top 5 sustainability risks across our entire plan based on our holdings. So this snapshot really gives us a good handle on what our exposure is and tells us where we need to focus our efforts as an organization. This is where we focus our efforts in terms of integration of ESG factors, engagement with companies, as well as education across the plan on certain risk factors. Again, I'll bring out cybersecurity, which is number 5. This is an area of risk that is probably not well known, and a lot of our analysts and portfolio managers didn't really have a very good handle on how to assess the risk, what are the kind of things they're looking for. So of course, we would bring in additional education and resources in order to help them with that. Next slide, please. So other ways that we apply SASB standards. Well, of course, we started looking at SASB a number of years ago, and we were really frustrated as an organization and quite honestly overwhelmed by all the disclosure frameworks and standards that were out there. There's a whole alphabet soup of CDP, GRI, CDSB, and we actually found that many of our portfolio managers really weren't using a lot of them. So maybe the reports or the disclosures were focused on too many different stakeholders, so they didn't have relevant information, or it was hard to find the relevant information, or it was too focused on just a single risk, such as emissions. Often, these standards would ask for disclosures that in the minds of our portfolio managers weren't very material, and then it really quickly lost credibility from there. So we looked at the SASB framework because it addressed many of those challenges for us. First, it was sector-based and recognized that different things were material to different sectors, and I think Janine talked a lot about that. As well, each metric was firmly tied to a financial impact. And this is, of course, how our investment teams all look at ESG risk in terms of its ability to impact the long-term performance of the company. So a lot of my team's early work with the SASB standards was really just to start socializing this across the portfolio managers, making them aware of these standards and really, what the approach SASB used was. Next slide, please. So as part of this institutionalization or education process, we actually sat down with each one of our sector analysts or portfolio managers at Ontario Teachers, both in the public and private space. And we sat down metric by metric, sector by sector for SASB. We sat down and discussed what the metrics were and understood what the analyst's view on those metrics were. Was it something that it was material to them? Do they consider it in their investment process? And how does it inform their investment analysis? We went through this to really drive home sort of the understanding of SASB metrics and the materiality factors. And this actually enabled us to participate meaningfully, I think, in the SASB standards consultation earlier this year. And because the analysts themselves were quite familiar with the SASB standards, they were also very happy to reach out to their contacts at the companies that they held in order to encourage them as well to get involved in the SASB standards consultation. And I think that's one aspect of the SASB metrics that I think really resonated with the portfolio managers, was the fact that they were being asked for their opinion and companies were also being asked for their opinion. And in the end, I think SASB has delivered a product that everyone can use and is relevant for everyone. Next slide, please. So as I said earlier, it has really laid a stronger foundation for us as an organization to not only support and promote SASB. As Janine said, our Chief Investment Risk Officer is on the Investor Advisory Group. But we also got buy-in and agreement across the entire organization on what the key disclosures we want from companies were and what we would ask for from all our companies. It also helped to align the plan on the purpose of getting disclosures, we don't ask for disclosures for the sake of getting disclosures, but we wanted to ensure that when we ask companies for information, that we are actually using them. Next slide, please. All of this really led to the creation of a disclosure expectation guide that we can in turn now share with companies. Because one of the most common questions I've gotten from companies when I talk to them is, well, what information do investors really want? They keep asking for different information. We get so many disclosure asks. We're not quite sure do you guys even know what you really want? So really we work to create our disclosure guides. And, it recognizes that a laundry list of disclosures wasn't really very helpful. So we really don't want them to be a checklist. And we also recognize that portfolio managers themselves need to exercise judgment. And they needed guidelines that would account for the unique circumstances of companies, that address the fact that there might be different types of disclosures or inconsistent application of disclosures across different companies and across sectors. And they also knew that there might be other signs that indicate if companies are managing specific risks well. So our guidelines try to incorporate all of that and really use the metrics as a way to corroborate or to back up some of the actions that the companies say that they are taking. This guidebook that we developed really also is used in our private assets to help identify the material issues at both the diligence stage and at the asset management stage. And this is important because there really aren't any ESG resources or research or data available for private companies. So the guidebooks really help to focus the private equity teams on the right issues and in the right places, especially when they're looking at sectors that they aren't all that familiar with. Next slide, please. And finally, these sector guides are also used to help us in our engagement with companies. So not only did we identify the key risks and how they are integrated in the investment process when we sat with our portfolio managers, but we then took all our companies through the standards and lined them all up in terms of what their disclosure was on each metric. And this allowed us to compare different companies across the same sectors in terms of what they actually did provide. And through that, and through using informed judgment, we actually use that to identify a set of best or good practices from companies. This really gave us a high watermark when we talk to portfolio companies. So now we know what other companies are reporting or what the best companies are reporting. And we really use that to help our discussions with other companies and promote better practices. So we recognize that it's just not good enough for companies to provide disclosures, but the disclosures have to be of a certain quality. If you disclose emissions data, well, you need to show a trend in emissions data, not just the emissions itself. We also want to see targets or and how companies are meeting those targets and how those targets are set, not just what those emission reduction targets are. As well, many companies provide a lot of high-level qualitative responses. This is our approach, this is our strategy, these are our policies on E&S. But it really helps to sort of drive home to companies that all of these statements and all of these actions that companies say that they are doing really need to be backed by metrics. And this guidebook that's been informed by SASB really helps to highlight those metrics that really that we need to see in order to assure ourselves that companies are actually doing what they want, what they say they are doing. So next slide, please. So this is just really a quick case study of a company, Noble Energy. On the next page, sorry, if we can move up a slide, sorry. So when we initiate coverage on a company, each one of our ESG, each one of our portfolio managers does an ESG assessment on the company. And these are based on SASB metrics. They may not cover all the metrics, but what they do is cover what are the maybe top 3 or 4 key risks in that company. And it's usually not just based on the materiality of the factor, but it's also an assessment of how the management of the company is mitigating or managing those risks. So they make an assessment at the same time, not just of the metric itself, but of the management of it. And this really helps to highlight areas where we want to dig a little deeper with companies. Now, if you go back to the previous slide, sorry. So one of the case studies we had was in Noble Energy. So based on our research, we had actually voted against a shareholder proposal that went out last year, asking the company to publish short and long-term plans to align with the goal of limiting global warming. Now, some of the reasons for that were really that the timelines and the ask from that shareholder proposal we thought were overly prescriptive. But at the same time, we did feel that based on our analysis of the company, that they did need to provide more transparency and insight on their climate change strategy. We looked at their disclosures and really found that they were lacking in a number of different areas. And we engaged with the company both to encourage the publication of the climate change strategy, but as well to consider some of the disclosures that we had outlined in our guidebook. Now, we've had a good relationship with Noble Energy for a while, and in our conversation, the company did take a look at our guidebook and committed to actually consider using that guidebook to shape their disclosure in their upcoming sustainability report. So this is just really one case study of, and there's other companies that we've talked to along a similar vein where they need more guidance on the type of disclosures that they're being asked for and what investors want. And we're really hoping just to at least get those disclosures that we need by providing some meaningful guidance that's really rooted in how our portfolio managers think and evaluate and assess companies. So I think I'll stop there and look forward to any questions at the end of the session. Thank you.
Thank you. Thank you, Deborah. That's so interesting. And I think definitely that guidebook disclosure work is really a leading practice. And I also really want to publicly thank Ontario Teachers for its participation in the SASB standards consultation process. The feedback from the investment teams was incredibly valuable. So with that, I want to turn it over to Katerina to talk about Nordea's approach and a case study at Nordea. Katerina?
Yeah, thank you very much, and thank you for having me. First of all, I want to just tell a bit about Nordea Asset Management and who we are, because that might not be evident for everyone. And then I'm going to talk a bit about how we've used SASB framework and also in order to develop our analysis model and ESG analysis. So if you turn to the first slide, please. We're the biggest Nordic asset manager. We're managing about 220 billion euros in both equities, fixed income, and balanced funds and mandates. We've been a PRI signatory since 2007. And so we've been on this journey for a long time, and it's definitely been a journey, and it continues to be a journey. Just to mention, one milestone is in 2010, we developed our first framework for doing ESG analysis, which was, of course, not as advanced as today. And SASB came in very handy when we had the discussion on how can we actually make this analysis more useful in the integration or in the financial analysis, and how do we translate what we do within the ESG analysis into impacting the financial analysis. We were looking at different value drivers and how should we do this, and that's when the metrics was coming in as very important, and there we had a lot of help from the SASB framework, I would say. We're a team of 9 focusing on ESG analysis, ESG integration, and active ownership. And of course, it's not only this team of 9, because we're also very keen on having the portfolio managers taking this responsibility, and we're monitoring how they are taking this responsibility. And I think it's fair to say that some has come further than others. Moving to the next slide, I just want to show a bit how our framework is looking like. I mean, it's part of our mission to deliver returns with responsibility. And what does it mean for us? It means that we are active owners, that we engage with the companies we invest in, that we integrate ESG in investment processes, and that we provide ESG products. So it's not very different from the PRI principles. And then we've taken, since 2007, taken different steps to ensure that we fulfill the principles. And this slide here is just describing how we have the active ownership, engagement, and voting as something that's covering all our products or funds, and then the norm-based screening, which we see as a hygiene factor. We have exclusions, which is also part of the hygiene factor. And then we have on the left-hand side specific RI enhanced products, and on the right side is showing how we integrate ESG in all traditional funds. And what do we mean by RI enhanced products? It's products which exclude certain sectors or that have specific requirements on the ESG analysis. So in order for a company to be investable, the ESG rating has to be good enough or at a certain level. And I think you can move to the next slide. Yeah, and before I go into that, I should mention that, as I said, we've had our analysis model since 2010. We think the SASB framework with the metrics was very useful, and we participated in the consultation period because, of course, our framework already built on that we need specific key issues, as we call it, for different sectors, because we're not looking at the same things when analyzing a telecom company as we do analyzing a bank, for example. So in that sense, I think the SASB framework was very much a development of a framework that we already had. We think the framework is very useful when engaging with the companies. We meet all the companies we do analysis on, and we also make recommendations on improvements. And there, I think the metrics that we want them to provide, there we can use the SASB framework a lot. And as Deborah said, we get a lot of questions from companies. So what is it that you want us to report on? There's so many different sets of standards. So what's important for you as investors? And there it's all about metrics. We need to be able to measure the material issues. And also, of course, important for us is also if there could be numbers on how is these metrics actually translating into increased cost, decreased costs, and things like that. But just to showcase a bit how we do the analysis, and I think that's also showing a bit how we use the metrics. You can move to the next slide. So I just took one of the companies that we've been looking at. It's a Chile-based copper mining company. It's the 4th largest producer of copper in Chile, a low to medium overall country risk. And that might sound a bit surprising, but that's in the emerging market context. And I mean, it's particularly focused on water and the supply of water. From a sector perspective, we view this as a high-risk sector with several ESG issues. So if you move to the next slide. So here you see the SASB framework, or part of it's actually our own framework, but how we have highlighted the issues that we focus mostly on in Antofagasta case. So in this specific case, it's water, energy, community engagement, safety, and corporate governance, which is pretty much in line with what the company is also focusing on in their reporting. So if you move to the next slide. So then we take each of these key issues, as I call them, to go through how the company is performing, looking at policy, process, and performance. And of course, we gather everything we can, and then we meet the company to ask all the questions that we haven't got an answer on, just reading reports and things like that. So I think I don't need to go into the details on corporate governance, but the conclusion is that the corporate governance practices are sufficient and in line with minority shareholder interest. So I think we can, in interest of time, I'll move to the next slide, which is becoming more related to the metrics. So, I mean, it's type of operations and also a country where water scarcity is an issue. And of course, it's addressed through different technologies. So, I mean, 3 out of 4 mines are in the desert, which of course leads to water scarcity issues. And mining is a very water intensive operations. And I mean, their own calculations say that the water demand will actually increase by 66% between 2014 and 2025. So they need to find a solution to this in order to continue their mining operations. So what's the strategy and processes in order to meet this challenging exposure? It's the first mining company looking at thickening tailing. They also use this desalination plants, and they're pioneering using of seawater. And looking at the metrics, I think they're very focused on securing water rights, and they have a water consumption that is better than peers, so intensity is lower. They're also very focused on water recycling, and their recycling rate is above industry average. And as I already mentioned, seawater accounts for 45% of group water consumption, which is quite high compared to peers. So that's just showing a bit how we do the analysis. We identify the key issues, and then on the key issues, we look at policy exposure, process, strategy implementation, and finally performance. And that's, I guess, where the metrics comes in. Because one of the criticism when we started doing this analysis was that it's very fluffy, it's not, it's very subjective. But I think the more metrics we can add, the more reliable the analysis becomes and usable from an evaluation perspective. And I'm running out of time, so I think you've got the message. So I'm ready to move to one of my last slides. So if you could, I just want to summarize here. So what we do is that we have this ESG scorecard that we use for all the ESG assessments we do on companies. And it's of course also a method that can be used not only by the responsible investment team, but also the other investment teams. And we look at 5 different pillars: business model, corporate governance, business ethics, environment, and social. And we take, and the areas that are in red and green are the ones that we've focused on in this specific company. And then we set a score on the 5 different pillars, which ends up in a final rating for the company. And that's pretty much the method. And I'm 1 minute past my time frame. So
No,
keep some time for questions.
Katarina, thank you. That is such an interesting process. And maybe I'll kick it off with the first question, which is, So this scorecard is very interesting. Do you share it with companies is one question. And then two, can you give an example of what your portfolio managers might do with this scorecard?
We share the scorecard with the companies, yes, and we also include some proposals on improvements in reporting and metrics that they should report on and things like that. For the first question, and the second one, the portfolio managers use, in some of the funds they can only invest if a company has a high enough rating. So then it's of course a discussion with the portfolio manager on especially the cases where company is non-investable. And then we're also, we have part of the scorecard is translating into financial impact, which is something we do together with the financial analyst and the portfolio manager. So if we have identified water as a key issue, so then trying to understand what are they managing this risk properly, or do we see that there was additional capex needed, or so it's a tool to discuss around with the portfolio managers.
Got it. That's very, very helpful. And then I think we have time for one more question. A really interesting question came through, which is fixed income, and why do the panelists have any opinions on why ESG integration appears to be less pervasive in fixed income? More people talk about it in an equity context. And I think, Deborah, do you have any views on that, given Ontario Teachers' portfolio?
That's a really good question, and I think it's something we've kind of struggled a little bit with as well, because I think the way valuations are done, or the way a credit analyst looks at things is quite different, and most of the times they're focused on downside, and there's really no upside focus. So it's necessarily looking at primarily tail risk, and we're really trying to focus when we do our ESG analysis on something that's going to impact that company's ability to meet their cash flow payments back to you as a lender. So we actually had an interesting one with when we're trying to say, okay, well, they're probably not as concerned. It was financing the building of some resort or something, and it's probably not so much, going forward. You're not looking too far forward in terms of the risk. What we focused on was any type of extreme weather that would, or work stoppage, anything that would actually stop or impact cash flow payments to the company over the period of time that we had the loan out.
Got it. And then we have another question for you, Deborah, which is, do you make are your disclosure guides public documents? Are they publicly available?
We have just published the one for the oil and gas sector. We are in the process of considering whether we would post the whole range of them. And I know part of it is that we haven't, we've done the disclosure expectations, but the part two, which I think is important, was really trying to provide the best practice guidance. So what do we want to see from companies? So, not just, I don't just want to see your water use, but I want to see, the trend in your water use and your plan for reducing it, sort of thing. So I think we're still working through some of the other sectors on that as well.
Got it.
But if there's any callers that had a particular interest in a sector, I would invite them to email me, and I could certainly get something over to them. Okay, well, I'm very sorry to say we're out of time. I think we may have been ambitious about what we were going to cover on this webinar, but it was fascinating. And Deborah and Katerina, particularly to hear about the real life examples. We are going to make a recording of the webinar, which would include the slides available to participants. Several of you have asked about that, so please be on the lookout for that. And we want to thank all of you for dialing in, and also thank our participants, Mandy, Katerina, Deborah. Thank you so much for your time. It was fascinating. And with that, we're going to dial off.